Bitcoin briefly scaled $47,000 in a muted reaction after the U.S. Securities and Exchange Commission approved exchange-traded funds that invest directly in the token as traders wait to school how much money the products garner. The largest cryptocurrency was steady at $46,060 as of 7:48 a.m. Thursday in London after pairing the earlier climb. Some view the SEC decision as a landmark step widens the investor base for digital assets. Bitcoin had already jumped over 160% in the past 12 months in anticipation of the ETFs, as well as looser monetary policy. Other major cryptocurrencies were mixed. Ether, the second biggest token, stood out with a 9% advance in the past 24 hours to $2,587 on bets that it will be working concerns of the next wave of spot crypto ETF products in the U.S. And market watchers had wondered whether Bitcoin was ripe for a pullback from the actual green light for spot ETFs if speculators decide to bank some of the profits from the token's months-long advance. The news had largely been priced in, and inflows into the ETFs will now be closely watched, said Carolyn Moron, co-founder of digital asset derivatives liquidity provider Orbit Markets. The SEC authorized funds from asset management heavyweights BlackRock, Invesco, and Fidelity, as well as products from smaller competitors such as Valkyrie, to begin trading Thursday. Most of the money immediately moving into Bitcoin ETFs will be reallocations from other Bitcoin exposure, said Leo Mizuhara, founder of DeFi institutional asset manager Hashnote. It'll take a time for new money to flow into Bitcoin via the new ETFs. The SEC had opposed spot Bitcoin ETFs for more than a decade, while the crypto sector as a whole is faced with withering criticism from the agency's chair, Derek Genza. Well, he's repeatedly argued that the industry is rife for fraud and misconduct. The SEC cracked down on digital assets following a 2022 rout in collapses, such as bankruptcy of Sam Bankman-Fried's FTX exchange. But the SEC last year lost a key legal fight against asset manager Grayscale Investments, spurring speculation that the regulator would acquiesce to the spot ETFs. The digital asset investment house is now converting the $29 million Grayscale Bitcoin Trust, the largest fund investing in the token, into an ETF. And while we approve the listing and trading of certain spot Bitcoin ETP shares today, we did not approve or endorse Bitcoin, Gensler said in a statement. Investors should remain cautious about the myriad risks associated with Bitcoins and products whose value is tied to crypto. But crypto supporters have offered various arguments in support of Bitcoin, all hotly contested. These include the claim that it is an inflation hedge and store of value, kind of digital gold, that can bolster the risk-adjusted performance of diversified portfolios. And the fact that the U.S. has allowed spot Bitcoin ETFs is an important moment in the brief history of crypto, where crypto goes from a niche investment to a mainstream investment. Many investors will seek to diversify their portfolios by adding some crypto exposure through these ETFs. He said,